The UK is facing its biggest economic crisis in decades. The UK economy is facing its worst recession in 30 years. The economy shrank by 0.3% in the first quarter of 2023, and it is expected to shrink by even more in the second quarter. This is the worst recession since the 1990s. Inflation is at a 40-year high. The Consumer Price Index, CPI, rose by 9% in April 2023, the highest level since 1982. This means that the cost of living is rising sharply, and people are struggling to make ends meet. The value of the pound has fallen to its lowest level in decades. The pound has fallen by more than 10% against the US dollar in the past year. This makes it more expensive for businesses to import goods and services, which is pushing up prices even further. The UK is facing a skills shortage. There are not enough people with the skills that businesses need, which is making it difficult for businesses to grow and invest. This is a major problem for the UK economy, as it is holding back growth. For ordinary Brits, the pain is visible. Grocery bills and petrol prices have shot up. Mortgages are getting costlier. Rail workers, nurses, even lawyers have gone on strike. The average UK household faces the worst cost of living squeeze since the 1950s. Now, how did Britain get into this predicament? Well, it was a perfect storm of multiple factors. The Brexit vote in 2016 initiated years of uncertainty that weakened business investment in the UK. The global pandemic that started in 2020 disrupted trade worldwide. But the final blow was Russia's invasion of Ukraine in February 2022, which sent energy and food prices surging, hurting import-dependent Britain. The Bank of England initially underestimated inflation pressures. When it finally acted, it moved too slowly to raise interest rates and sent confused signals. The government announced a mini-budget in September 2022 that shocked markets, forcing an embarrassing U-turn. Now with inflation at a 40-year high, Britain faces formidable headwinds. Real wages are dropping even as companies struggle to recruit workers. UK exports will likely falter as global growth slows. The Russia-Ukraine conflict continues rattling markets. To tame prices, it will keep lifting rates, worsening the cost of living crisis temporarily. Most experts foresee a recession approaching. So the economic outlook for 2023 remains gloomy. UK households and businesses are preparing for a tough winter and year ahead. Let's analyze in depth some of the key factors that brought Britain to this difficult spot. By voting to leave the EU in 2016, Britain entered a period of profound uncertainty. The eventual deal negotiated by Boris Johnson preserved zero tariffs and quotas on goods but erected new non-tariff barriers. The UK also excited the EU single market and customs union, disrupting long integrated supply chains. Research suggests Brexit shaved approximately 6% of the size of Britain's economy. It also cut off a vital source of immigrants. Brexit set the stage for many of Britain's current woes. Pandemic COVID-19 battered the UK economy, as it did nearly everywhere. However, Britain suffered the worst death toll in Europe after a botched initial response. The economy contracted over 9% in 2020. Brexit likely amplified the damage by hindering coordination with the EU. Furlough schemes narrowly avoided unemployment surging but built up state debt. Russia's invasion of Ukraine in February 2022 delivered an enormous external shock through surging energy and food costs. Britain imports over 50% of its gas and relies heavily on staple food imports like wheat. With supply disrupted, UK inflation jumped above 9%. Sanctions against Russia also reduced British exports. The Bank of England expects Ukraine war effects to persist in 2023. Britain's economic stewards made mistakes that worsened the crisis. The bank moved too slowly to tighten monetary policy amid rising inflation in 2021. Communication about rate hikes sent confusing signals to markets. In September 2022, Chancellor Kwasi Kwarteng's mini-budget full of unfunded tax cuts shocked investors, causing the pound to crash. This forced the government into an embarrassing reversal. The bank had to intervene in bond markets to halt a meltdown. Household energy bills and food costs have jumped even as real disposable incomes fell 2.2% in 2022, the largest drop on record. Millions are being pushed towards poverty and relying on food banks. Consumer confidence has plunged as families run out of savings and borrowing room. This will weigh on economic growth. Worker shortages across many UK sectors like trucking, farming, nursing and hospitality are hampering economic activity. Brexit cut off a supply of EU workers. Generous furlough schemes reduced incentives to find jobs. With 1.3 million vacancies but limited candidates, wages and prices are being forced up, fueling the inflationary spiral. Businesses are unable to meet demand. All in all, it was a perfect storm of repeated setbacks that left Britain's economy reeling. Unfortunately, the short-term outlook remains worrying. Here are the main risks for 2023. Inflation will likely peak around 11% by year-end before slowly decreasing through 2023-24. High prices will persist in eroding living standards. To rein in inflation, the bank will continue aggressively hiking interest rates, possibly up to 4-5%. This will slow growth and may push the economy into a sharp recession. Global growth is slowing with major economies like the US also at risk of recession. Weakness in the world economy spells lower demand for UK exports. Business surveys show spare capacity and inability to fill vacancies as hampering output. Financial markets remain febrile and vulnerable to negative shocks or policy missteps. Sterling could come under renewed pressure. Geopolitical tensions over Northern Ireland's post-Brexit status might resurface and cause economic disruption. Relations with the EU remain strained. The Russia-Ukraine conflict shows no signs of swift resolution. Further volatility in energy markets is possible depending on the course of the war. 2023 is shaping up to be a tumultuous year for the UK economy. However, Britain retains fundamental strengths like world-class industries, universities, and legal institutions. With the right policy mix, it could emerge strongly once global headwinds fade.